All right, folks, let's go ahead and take a look at Pond. And just before we do, I'd like to preface the fact that we always take a look at Bitcoin and Ethereum first, just to get a baseline of the market and see what's going on. And if you're new to the channel, I'm not a financial advisor. This is for educational purposes only. You should always do your own research. And I was asked by my community to go ahead and cover this. So I'm just going to go ahead and dive into the technicals and see what's going on. There's no fundamentals here, but if you have some insight on what's going on with the fundamentals, of course, feel free to comment in the description below. All right, let's go ahead and get to it. Let's take a look at Bitcoin first. Okay. So Bitcoin is performing quite normally right now. Okay, so let me go ahead and enable the moving averages. I like to use the 200-day moving average and the 50-day moving average, which is this yellow line is the 50 and the 200 is the purple line there. Let me go ahead and zoom in a little bit for you. And what we like to look at here is just, identify a couple of things. We got a resistance level at 42,000 and a support level at 30,000. Okay, so right in the middle of that range. But most recently, the 50-day moving average was working as a support. Then thanks to Elon's tweet, price comes down, tests the 50-day moving average, breaks below, and then once we were trying to recover, we had the news in China that drove the price down even further, and now we're hanging underneath the 50-day moving average. As you can kind of see, it's been testing it a few times, but hasn't broken yet. That's Bitcoin for you. So that's kind of what's going on there. And again, this is just a 4-hour chart, and this is the TradingView desktop application. In case you'd like to follow along, I like the 50 and the 200-day moving averages on the 4-hour chart specifically because it gives me the best understanding of how the averages are working. So let's go ahead and move on to Ethereum next, just to kind of get a quick understanding here. Very similar scenario to Bitcoin, only difference is the price is marginally higher overall, compared to the average performance for Bitcoin. That being said, if we see the price being over the 50-day moving average and under this resistance of 2,900, working itself into this channel. So if Bitcoin can consolidate and stop being so crazy and stop being so manipulated by the overall market sentiment there, we're going to see Ethereum probably take off, jump through this 2,900 resistance level and try to see if it can break the $3,000 mark, roughly between 3,000 and 3,100 for the 200. Right? That's what we're looking at there. Now let's take a look at Pond. This guy up here. And Pond, what we're looking at is some pretty insane movement. So let's do one thing first. We always look at the one-day chart to get perspective on what's going on first, right? Any good trader will look at the big picture and work their way down. So that being said, as you can kind of see, there's not enough data for the 200-day moving average. This is likely a recent ICO and or just new to Binance because I'm using the Binance exchange for this information. Okay, so that being said, we got the 50-day moving average here. It is working as a resistance level presently, which makes sense. That's pretty normal. And then of course we have previous price action of upwards 31 cents. So it almost hit 32 cents. That was what? When was that? April 5th? Yeah, that's when Bitcoin was up over 64,000. As you can see here, we got this is the first China candle here, or correction, no, that's the first major sell-off. I don't think that was a China candle, I apologize. That is the first major sell-off back in April 17th, if you recall. It kind of carried over into the 18th, depending on where you're located, but that was the first major sell-off, and then we had 2 or 3 after, and then the 25th, as you see here, price came back up and recovered for Bitcoin for a while. It had a state of consolidation, and then, as we can see, sell-off, and then first major sell-off. Big surprise here, right in this range. That's where our first major Elon candle, whereas Tesla withdrew from Bitcoin, and that's kind of what's going on there. And then furthermore, we have the major sell-off here, roughly around the 18th, 19th, is the China candle, or just referred to as that. I say that to make it easy. In other words, the financial industry, I think that they made it illegal of some sort with the banks to utilize and accept Bitcoin. Again, I don't know the fundamental specifics, but that's generally the concept of what happened. That just made a major ripple in the market, no pun intended, and the price just continued to go down. We see some recovery here, and then of course we're here where we're at today. So obviously there's obviously a likely catalyst, right? Something happened to push the price up the way that it is. I don't know what that is. If you again you have some insight, feel free to include that. But generally speaking, that's what we're looking at here for Pond. And this is again the one-day chart. Let's go ahead and work our way down to the 4-hour chart. Looking at the 4-hour chart, we can see the moving averages, right? We got the 200-day moving average and the 50-day moving average. These carry the most weight on the 4-hour chart. I prefer the 4-hour chart for utilizing the averages because they really help you understand more specifically how the industry standards and the industry leaders are essentially controlling the market. right? Because they use these exact same indicators. Why you'll see the price blast through either a 50 or 200 day moving average quite commonly, right? So in other words, we take a look here. You see back here, right? For example, the price was being held down on the 50 moving average, and it blew through it right here. The fact that it blew through that is basically just the way that they control that. They controlled it and pushed the price up so it'd stay above for a while. It worked as a support for quite some time. And of course, the recent news here, unfortunately, from the Elon tweet affected it here, and then it came down. Yeah, the nice, another sell-off there from there. But a lot of times when we see this type of price increase like this spike happens really fast, really hard, it's usually one of two things. It's likely either the average true range in the price has been too low for too long, that it needs to be higher. It's commonly a normal thing. The other is, of course, some really fundamental news. There's likely, perhaps, a pond was released on another exchange. That could be part of it. But oftentimes there's some kind of fundamental news that caused this to happen. So it goes kind of crazy for a little while. So, my recommendation in this scenario, again, I'm careful. I'm a careful trader. I don't like risking my money. I'm not a gambler by any means. I like comfortable investments, right? So to me, something like this, I'd like to see it calm down and wait for a little while longer before making an investment. I do not like to FOMO in, and I recommend you don't. Yes, there's a good chance that the price will continue upwards. That happens sometimes. So if you feel like you have to invest a small amount. Just be careful and be wise, and set your stop limits too. That being said, we're looking at the RSI well over 70. Just keep in mind when the price goes up over 70 on RSI, it has a tendency to retrace and come back down. As we can kind of already see what's going on here, the RSI would be much higher if it stayed this high. So honestly, if you want to see a good bull run, you want to see short increases with periods of consolidation in between. We don't see that here presently, so that's kind of where we're at. If you look at the past, when the RSI went up over 70, it came back down. Look how much of a retracement happened. Of course, there was a lot going on with Bitcoin at the time, and obviously Pond is very responsive to Bitcoin's price movement, which is why this is an interesting candlestick, because it's contrary to what's going on with Bitcoin. Bitcoin's kind of complacent and moving sideways right now. Let's go ahead and look at the 15 and kind of look at what's going on. First of all, look at this previous price action, right? Let's go ahead and it's kind of consolidating, normal stuff. So let's do this here first. Let me go ahead and disable the moving averages. And just so you know, if you're new to the channel, I don't like to use the 50 or the 200-day moving averages on a shorter time frame because they're more designed for larger time frames. That's why the 4-hour chart is perfect for it. Some say the 100 or the 1-hour chart is good too. I prefer the 4-hour, being more of a traditional swing trader. However, when it comes to just say moving along and trying to find a good entry point, we don't want to use the moving averages because they don't carry a lot of weight on shorter time frames, right? So, which is why I always utilize the EMA and the VWAP. Now, these are going to be funny. These are really not going to work very well, honestly, because we pretty much have to go down to the 1-minute chart to see what's going on. But on the 15-minute chart, normally I'd look at this to I try to identify some type of confirmation. So obviously we got confirmation the price went up, but it went up so fast and so quick, there's really no way to really kind of find a good entry. Right now, the best thing to do is to mitigate your loss if you're already in. Hopefully you didn't FOMO in up here, and to kind of wait for the price action to continue to resolve itself. Because oftentimes when you see price increase like this hard, this fast, it goes up really, just say the top is 100%, it'll likely come down by 50%. So my price prediction for this is for it to consolidate right in this range here, somewhere between where it's at presently, upwards of 13 cents. So 11 to 13 is probably where we're going to see the price action for the near future. Because commonly, you'll see that as a very normal trend when prices increase like this out of nowhere. So that is kind of how it works. Now, just to clarify, the VWAP is typically the volume weighted average price. What it does, it tells us the volume last 24 hours expressed as a price. So the price is always naturally going to be higher or lower than that because of the fact that it works as a support and resistance level. So that is how the VWAP works, just in a nutshell. The EMA is this red line here. That is the exponential moving average, and that really much just tells us the price action expressed as momentum. In other words, let's scroll back a little bit so you can see. During this period of consolidation, you can see when it's below, it's more bearish. So it's very similar to the MACD in a lot of ways, the moving average convergence divergence, because the moving average uses the 12 and the 26 exponential moving average and kind of overlays the two. This essentially is a 15. I use the EMA 15. So it really tells you where the price action is, based on the actual price instead of an oscillator itself that's separate from the price, right? So the EMA can be very helpful. We'll look at the 1 minute chart to identify, of course, because this is really just, this is not the right data to use. You cannot make an informed decision on a time frame like this when all the price action happened in 30 minutes or the last 45. All right, so this is more of an accurate description. This is the 1 minute chart. And let's just go ahead and take a look at this here. So first of all, the VWAP is this blue line. That's the volume weighted average price. So right now the price should be based right around 13 cents, considering the last 24 hours of volume. With an increase in recent volume, that's why we saw the price come up, and the VWAP did as well. And you see these standard deviation lines above and below. Those really work effectively because they help us understand, big picture what's going on with the price action. In other words, when the price gets above these standard deviation lines, then the price will likely come back down. So as you can see, it peaked up above 3 or 4 minutes in a row, started to consolidate and then retrace. Okay. So what goes up must come down, right? You cannot expect a bull run to continue forever. It has to have short periods of consolidation. Now, this is such a small time frame that this is effectively a short period of consolidation, but we need more time, more data to kind of make a really good investment. And what I mean by that is that, we want confirmation when we take entry, right? So you'll hear me say that time and time again if you're new to the channel. Confirmation for me is usually 30 minutes on the 15-minute chart. So I like to see two candlesticks close above VWAP and EMA, so the red and the blue lines. I like to see it close above that to ensure that we have that confirmation it's moving in the right direction. Since we're kind of restricted to the 1 minute chart here, the confirmation we want to have is no less than, I would say, 5 minutes above both of those lines. So the price would need to continue over and back up above both the VWAP and the EMA line for me to feel comfortable with taking entry. I'd recommend you consider the same thing because these are tried and true day trader tools that work very well. So if you treat this like a day trade, even though you're planning to maybe swing trade it, look at the 1 minute chart to identify what's going on. And once you find a good entry and you get the confirmation the price is heading in the direction you want it to head, then and only then you want to take entry. Furthermore, take an entry that's small, right? Unless you know that pond is the end all be all, you want Marlin to be the very last coin that you invest in. Never go all in because that's when you get wrecked really quick. Now, risk tolerance is another thing that must factor in too. I have a 2-to-1, 3-to-1 risk tolerance, preferably 3-to-1 in crypto because the fact that you get a lot more traditional stocks, ETFs, and futures. So in other words, what I'm getting at here is if I were to invest, I wait first of all for the price to increase above the VWAP and EMA line and to hold for no less than 5 minutes. So we want to see 5 green candlesticks above that. It tells us that momentum is moving in the direction we want to head. Right? Those industry leaders are pushing the price up. So looking at that, that's what we want to look at first, right? We want to identify that. Second thing, once we have that confirmation, we take a small entry. In other words, I usually only go in about 20 to 30% in my first entry. So just say I have $1,000 I'm investing with. I would put in $200 to $300 initially, and then wait for further confirmation to add to my position. Good traders that have stability or just they're really focused and they don't get emotional with their investing are the ones that can continue to add to your position. It's hard to do at first because you feel like you're losing and it can be a difficult thing. But I promise you this, if you were to kind of set limits and ensure that you get into each trade with a goal in mind, you're going to be a lot better off. That helps. So with my 3-to-1 ratio, to say, for example, for my risk tolerance, I'm okay with losing 1%, but I'm also prefer to try to gain 3%. So I shoot to gain 3% every trade, and I prefer not to lose more than 1%. So what I do is I set my stop loss at 1%. So hypothetically, just say I took entry now, which I don't recommend, but just say the price is over VWAP and EMA. 1% would not be a lot because, right, look at how big this price movement is. That is a really small bar. Let's go ahead and zoom in a little bit further. That is 1%. All right. So again, all the more reason to be very cautious and be very careful in this scenario. Because 1% is it's a very small risk tolerance. That's what I'm comfortable with because I like to, again, take entry when I have firm confirmation. And I rarely get stopped out. But if your risk tolerance just say is a 3-to-1 ratio, then hypothetically you could do it, just say a 5% loss. You're okay with losing 5%, and you want to shoot for a 15% return. So let's do that as more of a hypothetical. That might be more appropriate. So say you take entry here. The lowest you want the price to go is right here. So this is, again, these are rough estimates, but as soon as the price comes down below at 5%, get out. So you set a stop limit at 5%, right? Or a stop loss. And then what you do, obviously, is you shoot for a 15% gain. That's 3-to-1. And these are just random numbers I'm throwing out there, that this is not an exact science. You have your own way of doing things. I prefer a 3-to-1 ratio. Oftentimes it turns into a 5 or 10-to-1 because I'm waiting for good confirmation. So the trick is to be patient here, not to just jump in and have the same theory and the same mindset, because you will get stopped out quickly when the price action is as violent and as volatile as it is right now. That's why I want to exercise caution and tell you to be cautious and be careful, because I mean, look at this price here right now. It's jumping up 5% and dropping 5% within minutes, right? So if we don't have that confirmation, this 15% gain is less likely. Okay? But hypothetically, that's roughly what I want you to kind of try to get into each trade with and have some type of mindset there. 3-to-1 is a good ratio in crypto. But look at that. Would have got stopped out right there because no confirmation, right? We're chasing the bottom in this case. We never do that. Good traders will only get into the trade, knowing they have confirmation that the industry leaders are moving in the direction that they want to head. So this is a case in point there as to why you always wait for confirmation. This isn't confirmation yet. We want the price to be over EMA, above the VWAP line. And it will take a little time to get there because the VWAP is averaging itself out over the volume, right? So it's going to slowly digress, whereas the price will slowly increase depending on how it happens. So you're going to want to be patient. Do not chase the bottom. There's a small likelihood this price could ramp back up at any time. We don't truly know. But if it does, wait for that confirmation. Wait for the 3 to 4 solid green bars above EMA and VWAP line before you entry. And I like to reiterate this because I've lost plenty of money by not honoring these simple trading tools that are exactly what the industry leaders are using. Okay? So you got to get on board with them. You can't fight them. There's no use. Granted, there's random Elon candles that show up every once in a while. We have no idea when it's going to happen, and when it does, we'll all get jacked, right? But if we have a stop loss and we set realistic goals, and we're not just FOMOing in every time, you're going to be a lot better off. Okay? So again, to kind of confirm my price prediction, if you must, right, is for the price action to be averaging itself out between 11 cents and probably about upwards of 13, maybe 14 cents. I would expect to see that over the next few hours, just based on the average true range for this coin. It should be higher, yes, but it needs to level out and kind of recover from this massive increase. So that is what I have here for you. If you find benefit, please comment below and like and subscribe if you haven't already. Feel free to join my Telegram group, my Discord channel. Show your support on Patreon as well. All these things are good, and I really appreciate you watching this far if you have. See you in the next video. Hope you have a great rest of your day.